All right, let's turn attention to petroleum products, and prices of petroleum products are expected to go up marginally this week. Now, this is in line with the expected two-week review of the product. Now, is this a sign of an end of months of decline? Well, there's more in the following Business Desk report.
Based on industry data and projections by Joy Business, prices of diesel and petrol products are expected to go up by just under 1%, while LPG should witness a 3% jump per kilogram. This should mean that a liter of these two products should be going for 4 cedis 81 pesos, translates into about 22 cedis per gallon. The increase Joy Business is learning has to do with the pickup in global demand for crude oil, which has impacted prices on the international market. However, our engagement with some oil marketing companies indicates that they will be absorbing the expected increase that should start from Monday. According to them, the increase is not that significant to warrant any changes at the pumps. For some, the concern is whether or not the recent stability and marginal reduction witnessed in prices are over, and that consumers should brace themselves for some hikes in the coming 2 months before the year ends. The Chamber of Petroleum Consumers in their recent analysis noted that the coming months may see some huge hikes based on the current development on the international market. Executive Secretary Duncan Amoore has maintained that unless government reviews the current taxes on the price build-up, consumers should brace themselves up for more hikes at the pumps. However, government, on the other hand, has not given an indication that it may heed to the calls to review the tax build-up on petroleum products.
Well, to discuss this further, I'm joined by Duncan Amoore, who is Executive Secretary of COPEC. Thanks for your time this afternoon. So there's a pickup in demand globally. Now we're hearing that OMCs are planning to absorb the increase in prices. That should be good news, isn't it?
Well, indeed, we would expect nothing of increases. We would have expected that between now and December, Ghanaians could get the sort of relief that they would need in order to be able to plan their budgets. Unfortunately, like you indicated, global demand is peaking. And so once that happens and this COVID pandemic also seemed to not be doing the kind of damage it did somewhere in February, March, then one would expect that global demand will probably be peaking back to the 100 million barrels per day. That would mean only one thing, that prices would head south. Fortunately, like you indicated, the kind of differentials you are seeing for this window may not warrant any increases at the pumps. And so I'll be surprised to see any of the major companies come to Ghanaians with any increases. These are marginal, escalations that could easily be absorbed if you look at their own OMC, should I call it, margins. And so we are not expecting any increases at all. Rather, we would have wished to see further reductions, 1% here and there between now and December, based on some calculations that we had done earlier. But then again, you cannot also predict international developments, especially with the U.S. elections drawing closer, inventories not being picked as much as they would have picked a month or two ago. It means that there will be a certain minimal shortfall within the global system, and that would, lead to some of the increases we are seeing. Although, like you rightfully put it, these increases are not that significant to see Ghanaians now have to pay more at the pumps. We are happy that the OMCs are going to absorb this one.
Interesting you talk about the predictability of oil prices going forward from now to December. We are not really sure what's going to be like. My next question was going to be whether or not things are going to stay like this for a long while, and for how long can the OMCs absorb the prices?
We would be surprised to see crude go beyond the 44, 45. We'll be very surprised. The U.S. shale production is still around the corner. If crude prices go above 45, the shale producers who now have had to decline their productions would now come back to the market because then it will be profitable. And so if you look at somewhere in March, the American system was throwing onto the market about 13 million barrels per day. As we speak today, it's declined to almost 10 million. What it means is that the 3 million cut, if prices should surge or go back to the 50s, the Americans are likely to come back flooding the markets. That would also have another declining effect on crude prices and, for that matter, fuel prices overall. We are not expecting prices to really go up, but like you did indicate, any geopolitical global movements is likely to see us see some of these escalations here and there. But in truth, between now and December, we will be expecting that the global market, considering the fact that there's a lot of supply in the system, which still outstrips demand, we would not be expecting that petrol prices will go up that much at the pumps if it doesn't go down altogether. And then again, you also made mention of the OMCs. There's a news report today. Quite a good number of them are owing government. Government, we know, will still need those revenues. And so whatever checks and balances or adjustments that would need to be done around this time so that some of them can offset their indebtedness to the central government, we would go for that, although we are also not happy that prices should go up against Ghanaians. But if it means that some 1, 2, 3 pesos here and there, in order that they will be able to make good their indebtedness to the central government, we would not want to see the OMCs collapse. And so whatever needs to be done to make them be able to sustain in business should be done. But then again, we are still expecting prices to go down between now and December.
Then the issue of tax on price build-up comes again. We had that in the report that played just before our conversation. Is that still relevant now?
Darrell, the only way forward we have said in an electioneering year is for Parliament to take a second look at the way we tax petroleum products in the country. Because it's an electioneering period, you don't hear much of government needing money and putting or slapping taxes on fuel products. And so we have said that the period after elections 2020, Ghanaians may be in for quite a turbulent or rough ride, because whatever happens, whichever way the elections will go, you would expect whoever the finance minister is, will be, could be, to come back looking for revenue. And you and I know the lowest hanging fruit for revenue for government often is petroleum taxes. And so we have advocated, and we still advocate, that Parliament should place a capping on the amount of taxes that finance ministers can collect from Ghanaians. That said, these finance ministers will now have the arduous task of looking for revenue elsewhere instead of heaping everything onto petroleum products. Because today, as we speak, if you do a comparative analysis of the sub-region, the Nigerian counterparts who produce oil as we produce and import as we import, they have similar dynamics, are still selling petrol for around 11 cedis, 20 pesos. We are around 21 Ghana cedis, going on to 20 if there are any increases. We say that these taxes play a larger role. Right. Government will need to take a second look at them. Government will need to raise revenue, but revenue should not be derived only from petroleum taxes. That is what we are calling on authorities to have a second look at, particularly Parliament.
Okay. Thanks very much for your time this afternoon, Duncan Amwa. As always, a pleasure to speak with you.